Tiff Mackem makes it very clear that interest rates are not going down at a rapid pace as people would expect. And renewals are starting to creep into everybody's mailbox and inbox, and they're getting shocked by what they're seeing. Tiff Mackem, he indicated that rates are not going to be coming down at the fast pace that people are expecting. We may even see things get pushed out a little bit further in light of what's going on south of the border. And one thing he made very clear, don't expect rates to drop to the levels pre-COVID. So to bring everybody up to speed on that, before COVID, the bank overnight rate was sitting at 175, and in March of 2020, because COVID hit, the Bank of Canada made 3 interest rate drops of half a point down to 0.25. Now, what does that all mean? On the retail side of it, what that means is back in March of 2020, all the banks and lenders that offered a retail prime were sitting at, I believe, 3.95%. And after the 150 basis point drop in the month of March of 2020, it brought that down to that COVID level at 245 that everybody took advantage of all these wonderful variable rates at 1.5% or lower. So what Tiff is saying is don't expect rates to go to those levels pre-COVID. So the retail prime was sitting at 395. Right now it's at 7.2. Don't expect us to get to those levels again. So he made that very clear. So folks, if you're waiting for rates to drop, don't expect that wide a delta to take place in a short period of time, because it's not going to happen. So you got to be very, very conscious of what is being said. And yes, he has made some comments in the past that didn't actually play out, which caused a lot of people to be, up in arms over, can you trust what this guy says? But the reality is we're going to see a little bit more pain over the next few quarters before we're going to see any indication of rate cuts. That means job losses. That means GDP just sputtering at levels that have been propped up because of all the population growth. So we're going to see some things start to suffer before we could see some good news with rate drops. And just because we are seeing rate drops doesn't necessarily mean it's bad. It's going to be good, okay? We're still going to be struggling. Now, not a lot of indication about the real estate market. Everybody seems to think that it's getting hot, but it really isn't. There's not a lot of stuff happening. And it's because people do not buy houses, they buy payments. And payments are still elevated at the interest rates we're seeing. This past week, we saw some fixed rates go up again. We're seeing the bond market really be stale at that 375, 377 range. There's not a lot of movement. So it looks like we're in a market right now where things are just not happening. We've seen a couple lenders do some rate sales on the variable, but who the hell wants a variable in the low sixes? Makes no sense. So let's all keep in mind about what the expectation was by the economists. Last fall, they said we should see a rate decrease in January. Didn't happen. Then everybody said, well, we should expect a rate decrease in April. Didn't happen. Then now we're all talking about a rate decrease in June. The TD economist just made a note that we may not see anything till July. So it seems that things are always pushed off. And for those holding their breath, hoping that there's going to be a rate decrease, a quarter point or a half point on the variable side is not going to make a hell of a difference, folks. It's just not going to happen. So please be wary about these expectations of rates coming down anytime soon. If they do, it's going to be nominal. It's not going to have a major impact on fixed rates and what we're seeing in the marketplace. So be very, very aware of what's going on so you could prepare and be ready for what's to come. It's going to take a while. Respect the lag. You have to be weary about what all these prognosticators are saying. They haven't been right. And I'm starting to get a little bit antsy about the fact that I predicted that we're going to be closer to 5 on the overnight bank rate than 4 at the end of this year, and I'm looking pretty good. So I hope I'm wrong. I really do, because I really want these rates to come down to help folks because they're struggling. Renewals are creeping up. More and more people are being surprised with their renewal statements. They're shocked at some of the numbers that are on these renewals from what they were paying. And it's really important to note that if you are in a 5-year fixed renewal and you want to go back into another 5-year fixed, the rule of thumb to use right now is about $111 per thousand you're going to see increasing on your payment. So if you have a $500,000 mortgage, you're probably going to be seeing a $555 increase to your mortgage. That's a rule of thumb right now, depending on if you go 5-year to 5-year. A lot of people are choosing the 3-year fixed rate as opposed to the 5-year, so there could be a difference there. But you are going to see a higher payment. You have to prepare for it. And the biggest kick in the nuts right now is these variable fixed payments. Folks that have had this product have to revert back to the original amortization schedule. So those folks that are on these variable fixed payments that didn't see their payments go up went into a negative amortization. In some cases, they weren't paying off anything at all, and they were in these Buzz Lightyear mortgages, these infinity and beyond type amortization schedules, and they will have to come back down to earth. Now, the big chunk of them are going to be coming up in 2026 and 2027. That's the majority of them. So we still have a long ways to wait until those folks are impacted. But we are seeing some folks that in the last couple years of that fixed rate payment, they didn't pay down as much as they thought, and their amortization schedule's out of whack, and they got to get back into the standard AM. So, you know, it's some tough times for folks, and we're helping them out with some budgeting strategies and whatnot. So if you do need help in that regard, please reach out. We're happy to help out. One thing I want to talk a little bit about, we've had a couple cases lately that are a little bit strange, and they involved clients of ours that bought homes that did not close. And they didn't close because of their fault. They closed because the seller wasn't able to clear their mortgages. So let me explain. In one particular case, we had a situation where a client was selling under duress, and they did buy at the peak. Values came down, and unfortunately, the mortgages that they had on the property were more than what they were netting out after real estate fees. So at time of closing, the second mortgage holder would not give them a discharge. And they did not want to have a realtor profit from them because they would take a loss. So they didn't release and discharge the property, and they're still dealing with it. And our buyers are like, what the hell? What do we do? It's like, you know, lawyers are dealing with it. It's not a fun process. And I think they're going to come to some arrangement and some negotiation with the realtors and the sellers, but not a very good situation. And this is something that hasn't happened in a very long time, but I think we're going to start seeing it more and more and more. Now, the other case was someone bought a condo that was purchased from somebody that bought it under the 5% program or high ratio, with the premium, with the drop in value, and the penalty on the mortgage. There was more owing than what was left, and that prevented that property not to sell. And in that particular case, the buyer just walked away and says, you know what, I don't need any headaches. I'll go buy something else. Their deposit was returned and they moved on. But I think what's clear is that when you are buying a home and that home was transacted in the last few years, there could be a situation where there may not be enough equity to get out of that deal for the buyer, and the transaction may not happen. Or there may be too much debt on it for whatever reason. So I think it's incumbent on people to do some searches and could take an extra step in making sure that that property will be able to be given full transfer of title to the buyer. Now, I caution all realtors that are taking on listings, do your due diligence. Do a search on that property. Make sure that there's no writs of execution, no mortgages that are worth more than the value of the home after netting of the real estate fees. And if you think prices are a little bit too high in a market, be wary. That could be a red flag for having too much mortgage balances owing on it. So, that could also be the reason why some of these listings are too high. It's because that seller needs so much money to get out of the deal clean. And that could also prompt why these values and listings are a little bit elevated than where they should. Whereas if you know somebody's owned a home for 10, 15 years, they're going to have a lot of equity built up, probably not a lot of money outstanding, and they'll be clean to get out. But something that's been popping up, and it's happened twice, which is too often in a short period of time. So I'm not necessarily saying it's a trend, but something I thought would be interesting to talk about. So be wary and be aware. We're going to go into the Q&A. So we're going to go into the hockey helmet, tighten the chin straps, get ready for what is being thrown at me this week. So the first question: what are some common mistakes you see home buyers make during the mortgage application process, and how can they avoid them? A lot of people traditionally want to know what the maximum mortgage they qualify for. And I think that's a mistake. I would prefer to always ask, what are you comfortable paying? What are you comfortable carrying? And kind of work backwards from that. So that way folks are not stressed and qualifying at the max and then go out and spend at the top dollar and be saddled with higher debt than they really are comfortable with. And understanding how much paperwork is required to validate income, to validate down payment, to make sure that you understand all the steps in the process, a good lawyer, a good realtor, a good mortgage professional, and understand the options available. And don't be like a cattle where everybody follows a herd. Understand what your needs and wants are. Understand how long you want to be in that home, and make sure that the term and the mortgage product aligns with your goals and timelines. If you think you're only going to be there a couple, 3 years, do you really need a 5-year term? These are things you've got to start thinking about. And if you're starting a family, what's that going to look like when your income's abbreviated if somebody's taken off on mat leave for 18 months? These are all things people should consider and should acknowledge in this process as you take on this commitment to pay back money for a certain term at a certain rate at a certain monthly payment. How do you assist clients in understanding and navigating the closing costs associated with their mortgage? This all depends on what type of product it is. Like if it's a refinance, it's quite simple. You're dealing with an appraised value and legal fees for the most part. When you're buying a new home, there's another series of fees. It involves land transfer taxes. If it's new construction, you've got development charges, education levies, all the builder setup costs, all the levies that are associated with hydro hookup, gas hookup, occupancy costs if you're buying a new condo and you're waiting for ownership to happen, or your actual closing costs relative to your occupancy date. There's so many different associated costs that you have to take into account. And then you get into the high ratio mortgages. You have situations where there are high ratio premium fees. So the high ratio premium has a tax. It's a provincial sales tax of 8% on that premium. That could be $1,000, $1,500 depending on how much insurance you're adding on to that mortgage. These are things people forget about, and they have to be explained. So what we try to do is we try to prepare folks for what that closing cost number looks like, and we try to make sure that they budget anywhere between 2.5% to 3%, depending on whether it's a resale, new construction, or whatever. So hopefully that helps. How do you see the role of mortgage professionals evolving in the future, particularly in light of technological advancements? From a technology perspective, technology is going to make life more efficient and should help the process be more seamless. But I do believe any mortgage professional has to have the knowledge, the experience, and the ability to adapt to the ever-changing marketplace and have a full suite of knowledge to deal with all cases, okay? There are a lot of mortgage professionals that focus just on a business, don't know how to deal with alternative lenders, don't know how to deal with private lending, don't know how to deal with commercial lending. And I think to deal with a true professional, they have to be able to address all issues being thrown at them, to do a full service to their community. Experience is really, really key. I think you want to make sure that your realtor or mortgage professional owns a home and has a mortgage. How many mortgage professionals rent and don't even have a mortgage themselves? Are they the best person to deal with when it comes to mortgage financing when they don't have one themselves? That's a question I ask as an old guy. I've been doing this longer than an amortization schedule, so I'm a little bit taken aback when new entrants are coming in trying to emulate a position of knowledge when they haven't had a mortgage themselves. Now, everybody's got to start somewhere, and I really encourage all newbies to find a mentor, work with folks that have been around, because there's a lot to learn. How many newbies have been through a cycle like we're in right now, where the market's turned around? Many have just seen the market go up and they think everything's going to be okay and low rates are here to stay, and not prepare for market corrections on both the real estate side and interest rate environment. If direct CRA lender link is established and they looked back, what percentage are fake income loans? Okay, so this person is referring to the government budget where the federal government introduced that they will look into the CRA linkage for mortgage origination for lenders to validate income, to try to eradicate all the fraudulent income documentation that's in the marketplace. And this person is asking if they do have that link and they look back, what percentage do they think would be fake? These issues are very regional in nature. They only take place in pockets where values are significantly elevated and people need to, fraudulently state income at a higher level than they make so they could qualify for mortgages to buy these things. It's very regional and is predominantly in Southern Ontario and in BC where these things take place. I think it's a small percentage. If they have the capacity to look back, I doubt they will. I think they kind of want to move forward and try to deal with what's coming as opposed to what happened. So I would suspect that it's a low number, under 5% is my guess. That's a guesstimate. Folks, if you do need any assistance with your mortgage or any financing and you need to speak to a mortgage professional, we're here to help. Please reach out, DM, email, call us, drop in for an espresso. The espresso machine's up to almost 7,000 espressos, so thank you for everybody that pops in here for an espresso every day. We welcome you. We always love to see followers, friends, and colleagues drop by. So please do so. We're located at 3250 Dufferin Street, Unit 4C, just south of Yorkdale. We're here all the time. So we encourage you to drop in. And folks, if you haven't already, subscribe to the OwlMortgage YouTube page, and you can find us on Spotify and Apple Podcasts with the new podcast, OwlMortgage, the Wise Old Owl podcast. Love to see you, and come by, say hello. I'll wrap it up. Have a good one. Enjoy the weather, and go Leafs go.